This episode, currently, I'm recording from a beautiful city, Kolhapur. I'm en route to Konkan. It's a unplanned trip. We all four had few days in our hands and then thought, why not to travel? And we are traveling to Konkan for about 3-4 days. That's what the basic plan is. Let's see how it's coming up going forward. Yeah, now let's focus on the chart. Let's focus on the market. This week is interesting because both these indices, they are moving in a specific range. Now why this becomes important, why this becomes interesting, and it's going to be important week coming forward, because it may so happen that both these indices will stay within the range, and then that's going to be a very tricky situation. If you take a look at the weekly candle right now for Nifty as well as Bank Nifty, it's like a small indecisive neutral candle. So that tells us that this neutral candle, in a way, this neutral candle is printed and it is not showing any kind of a bias, neither bullish nor a bearish bias. It is just holding us at the appropriate place right now. That range we are going to talk about in detail. So let's quickly let me take you to Nifty chart. See guys, I'm recording from a hotel room, so I do not have my conventional equipments. So this is the best I can do. But let's cover the video in detail. So whatever limited equipments I have, that shouldn't create any botheration for all of us. Now see, a range between range that we were talking about on the day of RBI policy, we had calculated this range of 18,000 and 17,880. This was one of the range that we had calculated. This is going to be a reversal zone is what I had suggested, I had explained. Now what I have done, I have changed the weekly range to the budget day high and low. So that way the range goes to 17,300 as a lower range and 18,000 as a upper range or a higher range. Now this is your broader range for this particular week, but at the same time what we need to understand is that we need a close below 17,802. If you recollect, in between one of the Wednesday, we had a low of 17,824, and still this level of 17,824 is holding as an important support for Nifty. So practically Nifty is restricted between 200 points, and this 200 point range needs to get broken in one direction, either on the upside or on the downside. If you're an option buyer, then my simple suggestion to you is, unless and until this range is broken, do not enter into any kind of a trade. Unless you are trading some strategies like me, then in that case you can still be in the trade, because it is going to have a slower decay, and it will keep on decaying in a gradual manner. This is what I'm expecting. So even if it goes sideways, still the option seller is going to make money. It's something that I want to share with you. Now once we close below 17,800, then very quickly we will reach to 17,460 odd level. This is something that I'm expecting. And if we take a look at the Bank Nifty chart, so Bank Nifty is again a tight range bound. The range within the range that we had seen, the reversal point is also working well. We have not crossed, or we have not tried to breach into this reversal point, but we have taken a resistance at 41,800, and now we are currently trading in a smaller range. For Bank Nifty, the range is smaller. It is 41,700 to 41,200. So 41,200 is an important support for Bank Nifty spot. It has to get broken, and once it breaks decisively on the downside, then it can be a fantastic journey for all of us. It will be a quick fall that we can expect, and quickly we can again go back to the low of 39,000 odd level, which we had seen prior to budget. Okay, this is what my expectation is. As for Rithix, nothing much to expect, because these Rithix stocks are not showing a decisively bullishness. The four bullish stocks, which are like IT, Infosys and TCS and HDFC Duo. I'm not very bullish on HDFC Duo, and also Reliance ICICI Bank, I'm bearish on these two stocks. State Bank of India is going to turn bearish in this coming week. Kotak Bank shouldn't matter much, is what my understanding is. So all in all, the bullish bias is not likely to be there as long as we are in the range, and once we break below the range, then we should look for some bearish trades. As for the trading friends, what I have done, I am input some trades. Now this is one trade which I have initiated on Friday. This is 2nd March, 17,300 call options I have sold at 6:30, and I have hedged this position with 17,800 call for the same 2nd March expiry. So this is 253 is buying. So hedged position, net we are going to make about 380 rupees. That is good enough. We are holding 10 lots. So it's a trade which is going to give us limited loss. So let us understand what do I mean by limited loss. If we take a look at this February-March bear call spread, currently this trade is showing us a notional loss of some 2,600 rupees odd. Now in this particular trade, if you take a look, then you will see that the possible loss is limited to 12%. I do not intend to take a stop loss of 12% of the total capital that is deployed. But what we need to understand here is that whatever total 4,82,000 capital that is required for this particular trade, we are going to make about 39% ROI. And against this 39% ROI, our risk is limited to only 12.5%. So it's a fair 1:3 risk to reward ratio. And with that expectation only, I have entered into this trade. Now, another important thing is that right now we are trading at 17,856. The moment we are below 17,650, or as per the calculation 17,677, this is the break even point. So once we are below this position will no more into loss. This will start generating positive returns. But I believe that with a slightest fall of like 50-100 points, this should start giving us good amount of money. See, the returns here are very attractive. So even though it's a hedged trade, hedged strategy, still we are going to make about 40% ROI on the capital deployed. So these kind of returns are insane, and no one gives you these kind of returns. It is only the matter of few days, couple of weeks, and this money should be in our account. Another trade that I'm trading is a trade which I had booked on Friday, right? So Friday was a day when I had couple of entries which was put into the system by some mistake, and I had to rebook those positions. So there is some weird scenario that can be seen. So we can see that 17,800 is showing some unnatural loss, but then this is the position which I had booked on Friday. On Thursday as well as Friday, I had to book this position, and I had created some position by mistake which I need to square off. I'll just quickly share that with you. So this was one. These were two positions. 17,500 calls I had covered in between, and 17,600 was one position which I had covered. So these two positions, I had one of the position I created inadvertently, so that has to get squared off, and eventually it was a little kind of a messy scenario. Adani was a good trade, but this was I just got lucky because it bounced ferociously from the levels. So in a way, it was a good trade. So these two trades I'm focusing right now: Nifty 17,300 call short and February 17,500 call short. These are the two trades I'm focusing on. Apart from this, I have Bank Nifty couple of lots short, Nifty couple of lot shorts, and Bank of Baroda one put option I'm holding one lot, just one lot. I'm expecting 3-4 rupees from this trade, from this option trade. So it will be a good outcome. ITC I have bought 370 put, and IndusInd Bank 1160 put option. So all these three stocks I am having a short view, and this is how the trade is going out. Guys, in this particular week, I afraid I will not be able to post daily videos. I'll try my level best. If I can get some better network, then in that case, I'll certainly try to post the daily observations as well. But mota-moti everybody knows what needs to be done. You have all the important levels, and it is just only about time now that once we break below 41,200 and 17,800, that will start decline in a slower manner. Understand the wicks are at a very lower level. So even if there is a fall, there cannot be a quick fall. And if there is a quick fall, wicks will confirm to us by rising by another 10-12%, and then that will be a confirmation that now the market is getting back into momentum. This is what we are expecting, and it should be evident to us, and then accordingly let's take a look at it. That's it from me for this week. I think it's a good detailed video that I have shared with you. Thank you so much for watching. If you have liked the work, Please share with your like-minded friends and also subscribe to our channel Growth Model. Thank you so much, guys. I'm signing off. Bye bye.